this. Okay, let me repeat for those ones who may have also had a network issue. As I said, a balance sheet is a statement of financial position, and it gives a snapshot, the status at a particular time. I have a car by December, in 30th October 9th, I have a table, I have a chair, I have a computer, I have cups. That's your status. Maybe I have this amount of money in the bank. That is whatever at that particular as at. That's why you'll always find when they put the title of balance sheet, they say the balance sheet of which investments as at 30th October. It will always be as at. When you see it being printed on the news, as at December 31st, 2021, it is those items as at that particular period. While income statement, you'll always hear the profit of which investments for the year 2020. So it is for the period, for the month June, for the month July. It is always for a period, over a period, while balance sheet is as at. Okay, you'll notice that. Yeah, as I said, assets are things that have a value, have a dollar value. You can easily convert into cash. Okay, you can convert to cash. Anything you can sell for money that belongs to you is an asset. Current asset is something you can convert within a year. Fixed assets, probably, you don't plan, usually you don't plan to convert it within a year, so it becomes more of an asset. I may build a building, I don't plan to sell it, so it becomes an asset. These people who are building shopping malls, those become fixed assets. They don't intend to sell. They intend to make money out of them. They become fixed assets. Liabilities. This is what you owe somebody. You have to repay. You owe somebody. You pay salaries. That means you owe somebody money to pay. You owe, you took things on credit. That means you owe. It becomes a liability. I was given stock on credit. That means I owe the person who supplied me on credit. It becomes a liability. Equity is the difference between what you have and what you owe. But in simple terms, is what you contributed. But sometimes when you put in business, money in business, and it starts growing, your value grows if the business is performing well. So your value in the business becomes that value. That is why you'll find maybe Bill Gates started at some point, he was at $300,000. And then at some point he became a billionaire because his value, his equity, his ownership, the Facebook owner, his ownership grew. So his equity, if he is to share, to sell a piece of his business, the value is very high. Okay, a receivable, you will find something called accounts receivable, accounts payable. A receivable is an uncollected revenue. For example, I remember saying you've supplied products to a supermarket, you kubanja them. That can be a receivable. Yeah? Or you can loan somebody some money for the business. That becomes a receivable. A payable is something you have not paid. Okay? You've not paid by the end of, balance sheet, we look at it as at this point. So if you have some money you've not received, it becomes a receivable. I expect to receive. That's why it's called a receivable. A payable is something I expect to pay. That's why it's called a payable. I expect to pay it, a payable, but I have not paid it yet. As at this period where the balance sheet is being developed or has been produced. Okay, so you'll find this as common assets. I wanted us to know that, especially receivables and payables, because you'll always hear this term, oh, I have a lot of receivables. That means you are not collecting a lot of your money. I have a lot of payables. It means you owe many people money. So I hope that is clear. Okay, and these are terms that we need to be acquainted with. So when we say assets, things that you have that have some value are equivalent to what you've borrowed, liabilities, what you owe or what you borrowed, plus your contribution in the company. Okay, your contribution to the company. So that is basically the summary of what a balance sheet equation looks like. Okay. Examples, I'm going to share examples of current assets. Current assets, money in your account, money in transit that is coming to your account, maybe it has not reached, but you got a notice, that is current assets. Accounts receivable, money you expect to receive, you are owed by other customers or other people, that is an account receivable. Short-term investment, maybe I saw a deal coming through and I said, instead of keeping this money in the account, let me put it with make this short deal. That becomes still a current asset. Inventory or stock, that is a current asset. Prepaid expenses, maybe I paid rent for 6 months. It becomes an asset because I've not consumed that month. So it is an asset, okay? Because I've not consumed the expense, but I have paid it in advance. I hope I don't know if you know about stocks and bonds. Some people trade shares of other companies. Those are also called cash equivalents, stocks and bonds. Cash or cash equivalents. So if you buy, they're called notes from bank. All those are basically things that you can convert to cash for the business. Inventory, which is stock, cash in your bank or in your hand. Okay, some of these are repetitions. Marketable securities. So, okay, these are things from the bank. Usually you can buy something from the bank to convert it later into cash. Okay, those all of that are current assets. Okay, loan to somebody that you are sure that you expect to receive within that year, it becomes an asset. Okay, non-current assets or fixed assets, buildings, land, property, equipment, machinery, intangible assets. Like if you have a patent, if this gentleman of Covidex patents and decides, you know what, I also want Covidex to be produced in Nigeria, South Africa. Trust me, this man will become, I don't know if it is a multimillionaire. Sometimes we just don't utilize the patent opportunities that we have. When you have a patent, it means you can sell, you have knowledge that is valuable and you can give somebody a license to produce. Some of you can innovate a product and instead of producing, you can have patent and say, okay, I may not need to produce myself. Let me license a certain company to produce. That is what Apple, you are seeing some of these laptops that you are using. A company just has its patent and design and whatever, and it gives another company to produce. And for them, they sell as their brand. I think you've seen that. Those are intangible assets. Okay. Franchises, I think you've seen these things like KFC, where chips, it's a worldwide organization. So if I decide that I'm going to establish a KFC in Fort Portal, Mr. Nwagaba, I have to be paying KFC some money because KFC is a brand. Are we together? So I think it's very interesting for you to understand an intangible asset. Some of you watch football. And I think you enjoy football. Oh, this player went to this team, they paid 40 million. They paid 30 million. They didn't pay just the player, they paid the value, the skill, the brand of that player. So you'll find some players are sold 1 million, another player here 100, 1 billion, and you ask, what is the difference? There is something intangible you do not see that is valued. So you will hear the latest developments. I think I saw in the news when Ronaldo went to Man United, the t-shirt sold close. Even the Queen bought for her staff the t-shirts of Ronaldo. That shows you that he's an intangible asset. So they made, I don't know how many million in terms of t-shirt sales, even more than when Messi went to PSG. I understand the money they used to sell him, they got that money in 4 days. For Ronaldo, I think in a day, the shirts disappeared because the demand was too much. That shows that they are intangible. They are a brand, and when a team acquires them, they have acquired an asset. Okay. Long-term investments are also non-current assets. If I invest in a fixed deposit of 5 years, that is non-current assets. Furniture and fittings, whatever you have, things, furniture, computers, cars, all this. Some of you who have farms, which have a house of avocado or whatever, we call those biological assets. You have cows. We can evaluate the cows and see the value that you are. You have goats. Those are biological assets. Okay. I know in our business plan, I kept on saying, okay, can you put some of the things that the company, because it contributes towards the bankability when you are communicating. All right. These are the terms. Liabilities, things that you may owe. What are some of the examples? Okay. So if accounts payable, I think I talked about it, money that you expect to pay out, wages that you're supposed to pay, anything you're supposed to pay back or pay out. Those are current loans you're supposed to pay within, taxes owed. These are liabilities. Liabilities. You are expected to pay. You owe somebody. You're expected to pay. Yeah, you incurred an expense, but you've not paid. Maybe you have called rent is an expense, but you have not paid it. It becomes a liability. You are supposed to pay it. That's where you are seeing accrued expenses. Yeah. Deferred revenue, I'm supposed to earn this money, but I have pushed it. Yeah. So those are examples. Non-current liabilities or long-term liabilities, these are, you can lease land. Some of you always look at buying land for square miles. Some companies, I think you've seen Chinese companies being given by the government, they're given leases, 50 years, 100 years lease. Okay, that is a long-term liability. Maybe they normally pay small amounts of money. Okay, sometimes if you want to have something big or a space and you feel it will be costly and expensive, you can just decide, and instead of renting, you lease and say, I need this for 10 years. Give me a lease. What does it take? Okay, long-term debt, long-term loan, that is a current liability. Okay, now since we know examples of this, now I can go into some of the things that we factor when we are looking at a balance sheet. Okay, so for those of you who sell goods and then you wait for your money, okay, sometimes you wait for the money in 10 days, in 20 days. We call that receivable days. Okay, so on average, you'll find I sell stock, but usually they pay me after 20 days, 30 days. You've seen some people in supermarkets, they are paid after 60 days. We call them receivable days. Then the number of days a stock or what you buy and you keep in your store, for those ones who are trading, the number of days your stock stays in your store before it is bought, on average, is called inventory days. Okay, just for knowing, because we are going to use this in some of the terms. Okay, capital expenditure means I'm buying an asset. I'm buying a vehicle. Sometimes you'll hear, I need 500 million. I'll use 200 on capital expenditure, and I'll use 300 million for OPEX, operating expenditure. It's just, you will hear CAPEX, OPEX. Okay, debt issuance and repayments. For example, if you receive money and you expect to pay, you will see this in our statements, in our templates, but I just want to introduce us into that. Ladies and gentlemen, I wanted to introduce this for purposes of knowing, okay? Now, since we know, we can look at some of the items based on the templates that I shared, and then the template I will use with you people to make a financial model, okay? Questions for me based on just the terms of the balance sheet. I know some of you have met these terms and these people, they want to cheat me my money. Now you have an idea what some of these costs are. Feel free to ask a question in case you want clarity. Or if there's something I may have not emphasized. Does somebody have a question? Cash flow statement does not have very technical terms, and most of the things you'll find we shall derive from the income statement and balance sheet. So as long as we know the two, the others will be fairly simple for us. So just out of that, does anybody have a question? Okay. So I'm just going to explain a bit, an example of a balance sheet statement. Let me just share my screen so that you can see an example of how one looks. Okay, let me use because I'm seeing this other one had okay, I'm going to use the tool that we shared. Now since okay, let me use, I'm going to share a number of tools, but just for us to know. Now with the examples, we are now on examples, so I'm just going to try and share as much, just so that you see and you now get familiar that, oh, this is what this means. Okay, so I'm going to share something here. Okay, this is an example. Don't worry about the beauty, you are going to get there. Okay, so this is an example of an income statement of a company. Let me see if I can. Okay, so you are seeing revenue, you're seeing cost of goods sold, seeing the gross profit. They now didn't put EBITDA thing, but on our template we shall use EBITDA because I always want to target it right. Okay, but in a nutshell, you will see it's just revenue minus expenses, and that is their profit. Then when we go down, sorry, let me just open the balance sheet. Okay, let me first hide this. Where is this? Clear all drawings. Okay, so for example, okay. Sorry, I don't know why this is. Okay, so the balance sheet, as you can see, assets. They have put cash. This is the amount of money they have. Okay. And you can see, okay, because they have put years, this is balance sheet as at maybe December 2013, 2014, 2015, 2016, 2017. So it's like, you know, once you know, you can add the years. Okay. So assets, he had cash of, I'm going to look at 2013. He had cash of 167,971. Accounts receivable, that is money he expects to receive, but he had not received by the time they were compiling this. That was 5,100. Inventory, that is the stock he had. The stock is worth 7,805. Then he has property and equipment, and the property and equipment is worth 45,500. So this is the total assets. Ladies and gentlemen, you remember the equation, assets is equal to liabilities plus stakeholders equity. So this is the total assets he has. Okay. Now, when we go to liabilities, okay, you are going to see here Accounts payable. Now you people are masters. You now know what an accounts payable. The money he was supposed to pay, but he had not paid by the time we were compiling this balance sheet. That is accounts payable. Then he had a kabanja, a short-term debt. He had some money he owed. Okay, he had a debt, a loan of 50,000. Okay, this is in dollars, so $50,000. Okay, so his total liabilities or his total loan is what he was supposed to pay. He has not paid, and the loan, that is 53. Okay, and what is his value? Equity, he contributed 170 in his business, and then he made like a profit which he has kept back in the business. That is, so it gives a total of 172. So his total liabilities is equivalent to 226,376. So the balance sheet, do you know why it's called balance sheet? Because this and this will always be one figure, same figure. That's why it's called balance sheet. That's why you are seeing here and here, they will always be the same. So that is as per that equation. Whatever I owe, I own, or whatever the business owns is equal to what I have contributed, or what I have in terms of my worth, plus what I have borrowed. Okay, so it will always be the same. I hope you can be able to now understand the balance sheet. Okay, it will always be the same. Okay, no worries if you have failed and yours is not balancing. We shall guide you through what could be the challenges, but that is how a balance sheet looks like. Okay, let me see if I could share another example. Okay, ideally I'm supposed to share with you this model, but I wanted all of us to have filled our the financial tools that the financial statement, because now our financial model will look like this. You'll put the name of your company, your email, your phone, your website. You'll put the products. I do honeycomb, maybe I do stick, maybe I do firelighter. Then if you want, what are the direct costs or the variable costs? I do raw material, packaging, labels, this is what I spend. I spend this amount of money, I made these products. And because I spend this amount of money to make these products, that means the cost of making each product is 262. Okay, so these computations have been done on the background. Okay, but it's what we shall use for our financials. Then I assume that some of you have stick, maybe you have stick, then you have honeycomb. So you can see, okay, I sell honeycomb at 1,500. And then I sell stick but stick contributes 80%, honeycomb contributes. So we've already calculated, put the numbers for you, and it will easily calculate your weighted price and your weighted variable cost. Using that, when we put the figures on your financial statement, so I've tried to develop a hybrid or simple, but it will give us the balance sheet, cash flow, and the graphs. But we can only do this if you finish the statement I gave you, because I wanted to get the basic units, and then we shall use it to feed on this. So as you can see, you don't need to know a lot of technical things. A lot of that is going to work on the back. Yeah. Ladies and gentlemen, questions. So I want to encourage all of us, let's fill this financial statement that I gave us. And then on Tuesday, this week, I'll send this template that I've shared with you, that I've shown you. Because once you've filled your figures, then next week I'll take you through the financial model, because a model is one where I can change. If my performance changes, it also changes on the 3. your income, your balance sheet, and financial will be changing for each change. And that's what I wanted us to have, because our performance may change. So I want you to have easy approach to this. Okay, but you need to first help me feel this. I hope, Edwin, you've understood now how you can feel. You can estimate. I know you may not have some of these records, but if you can estimate, what you are producing in a day, in a week, on estimate, you can just make your assumptions and estimate. Okay. All right, please, any questions? But I would like to stop from here. Usually financials are quite heavy for many, and I don't want it to be a stressful thing. I thought it would be something for us to introduce and then, pick it up from there. Now, since you have the financial statements, now you know what some of these items mean if you were not aware. So please, I'm now available for questions before we can close our session for today.
Yes, Roy, can I ask a question?
Please do, please.
Hello?
Yes, please.
Yes, are you going to share with us that template that you have been using to give us the session?
Which one? Which one?
The document. Because I've really missed a lot. And for the balance sheet, I wanted to ask about this term, about the accounts receivable. Like what does it mean? The accounts receivable and also accounts payable. And also this template you sent us, I see, are they accruals? I don't know. I don't know whether that is the right pronunciation.
Accruals.
But where there is current accruals, yes. So I just want more light about those.